what had happened after the trap price here broke out, caught that for a sell. But with USD CHF, right here we can see that trapping the price as well, getting resistance like that, getting support at the bottom. Once we have that price trap, this would have been a good entry for a buy right here. Now that buy could have been longer, but overall, the main area to catch it was at this resistance level. So that's why take profit was around there. But overall, the distance from up top to the support, resistance to support, is about how high it should be going up once it breaks through. So we can see that it definitely continued to break past that price and continue to move up. So inside of this, there was more market opportunities. If we see, I'm gonna go on to the 1 hour time frame, look at that same area. So with this area here, we can see that it was kind of creating like that double top pattern right there. Now, you guys in the chat area, let me know what this is showing me right here. What is it showing me on the RSI? Type it out in the chat area. Divergence, perfect. Okay, good. So yeah, overall right here, it was showing that we can see from this peak down here to there and even there, this is showing that it's going up. And then down here on the RSI showing the price is expected to get weaker. So it did do its job. And I was expecting that once it created like that double top pattern, even though if this was a little higher, because this was a little higher, I was kind of expecting for it to hit this support area, come back up to make like a head and shoulder type pattern. But sometimes what you see with double tops is it's not always going to be even. Sometimes it might be a little up. You're just waiting for that major breakout of the support. So we already knew that price was expected to get weaker, so we were just kind of waiting for that. We can see from the top to the support, it's about the distance that it should drop for that sell. Now, if I zoom in, I'm going to show you guys pretty much what I did right there in that area. So while we were seeing this double top happening, break of the support, continue to drop down, it did come down and it hit the support. So I drew this resistance line is support on this side. So it came down, hit support, and then it came back up. So when it came back up, what I did was my Fibonacci, getting the high to the low. Because it already created a lower low, we're expecting a lower high. And that's why I did my Fibonacci, 100 up here, 0% down here. By the way, that's kind of why I wanted to extend this a little bit longer so you guys can see some of my live trades, doing the analysis as it's moving along, because this was July 2nd. So like as it's moving, I'm analyzing. So I know we did a lot of back testing, looking back at the past to see what's happening, but that's pretty much what's happening now. Is this is what I did. Saw the double top, saw divergence. It's expected to go down. Waited for this to drop down. And even if you didn't get in on this sell, doesn't mean there's no more opportunities for you to get back in. And that's the whole part of trading, is like sometimes I spot the patterns and it had broken out like yesterday, but then I get in for another trade that I can see for like a reversal. So for this, hit support, came up, got my Fibonacci 0, and then we see the 61 and 50% level. Now I drew a box between those levels, like I had mentioned, in the Fibonacci training. So price had gone up, hit that 61.8 level. And if you were to get in on this sell, definitely suggest this stop loss being above that 61.8 level. And then as it's reversing, your target should be the support, because overall it's in a downtrend. It should actually be doing lower lows, lower highs to do that downtrend movement. but the very minimum that you should see it hit to is like the support. Now, not always will it come down to support. Sometimes it stops in the middle and reverses, but your chances of it coming down are much higher because you know it's already lower low, lower highs. So then from here, price is dropping, it hit that target, and then it came back up. Now, if you see pretty much what's happening is we have support, resistance, support, came up to resistance. What's most likely going to happen once it hits resistance? This could have been another area to get in for a sell. And if you guys can see the candlestick pattern that it did right here, that's an engulfing bearish. So that engulfing bearish happened right at that resistance level, which means price is expected to shoot down. So hit resistance and then continue to drop down. Now, if you did want to chop the price tighter, like, you know, you can kind of get like that support line right there, and then you can see price broke through. So price drop down, hit support. What's most likely going to happen? It's going to hit support and then come back up as resistance. Now, overall, we know it's consolidating. So because it's consolidating, price is going sideways. So now when price comes up to resistance, we're expecting for this to drop down. Now, if you see what I had done, once it hit this resistance was I did my divergence. I see this is showing it's going down up here. If I get the top of the price, because it's above 70, we get the top of the price. So above 70, this is showing the exact opposite, which means price is expected to drop. And now if I zoom in closer, now I had predicted that I was going to do that like right shoulder thing. It kind of did the same thing. Kind of like that double top like it did over here on this side. Had like that left and then right one right there. Kind of like that double top is what happened right here. But overall, created like that kind of neckline right there. Then I targeted the distance from up here to neckline is about the distance that it should drop once it breaks through. And that's why my take profit was right there, which it did perfectly hit and then it came back up. And that. Now, while all that was happening, this is why it's good to look at the bigger time frame. Actually, I drew this resistance here. Okay, so this doesn't have anything to do with bigger time frame, but basically it's just still trapping the price, getting this top here, and doing that resistance line coming down, because then pretty soon that's when we see that breakout going up there. But catching this for a sale, I caught this one, and if you see, this is more like a scalping trade, 72 micropips. You're just catching pips, but that's because I'm on the 15-minute time frame. If I'm looking at these patterns on the bigger time frame, those are bigger moves. So the bigger the time frame, the bigger that distance is going to be from your take profit. So that's why, like, for my entries, it's mainly the 15 because I can catch 72 on this one, and then I can catch on another pair, like another 72, and that's already like pretty much my 200 micropip goal. It's like 140 or 144 exactly. So it's mainly just catching 200. Some of these moves are like 200, like this right here. This would have been a 200 pip move, and that's it. 200 micropip move. Catch that, I'm done for the day if I wanted to just on one pair. Now for like this right here, see, when even though if this is coming up, coming down, like doesn't mean it's always a good market opportunity to get in because we're waiting for multiple confirmations. Now this might have been an area, but it's not really too much. It looks like left shoulder, head, right shoulder, right at resistance. And if you were to get neckline, like that could have been a market opportunity to get in for that sell right there. But I didn't get in during that time. I was probably sleeping or something was going on. There's always market opportunities everywhere. You just got to look for them and find the best ones. So then we have the resistance, support, and then breakout right here, and then catch that going up. So that's pretty much how I would do it as it's moving live. Now, another thing that I would get is going to be like the support, like this support line right here. So normally those support lines going into that uptrend, you spot them on bigger time frames. So you'd get this and then drag this further. So if it ever did come down, hit this area, there's a chance it can hit. Like right now where the current price is at, there's a chance that this would drop down, hit this area. This is resistance right here, which is, well, it was once resistance, now it's support because it broke through. So it can hit double support and then continue to go up. So that's mainly what we're looking for, is kind of spotting out these things. Trevor asked, does divergence work just as well on the 15-minute and the 4-hour, 1 hour? So for the 15-minute, it still works. It's just more of a smaller reversal that happens usually on smaller time frame. So the bigger the time frame, the bigger the pips, because you're looking at it from far away. So as you get closer, like you can even spot divergence on the 1 minute time frame. I'm gonna show you an example right now. If you go on the 1 hour time frame, let's see like this area here. Actually, it's showing it's going up. Let's see. Okay, let's do this area right here. So we can see right here, this is showing that it's going down like that, while up here, this is showing it's going up. And then price did shoot down. But when it shot down, because this is the 1 minute time frame, like let's say that's just one confirmation. Let's say this is like a head and shoulder pattern. The breakout happened right here. Stop loss somewhere up here. Take profit probably down here. You see it's 32 micropips. Plus you have to like minus the spread. Depending on some brokers, usually it might be like five pips. So it's actually, instead of 32, it'll actually be like 30, like 25, 27, somewhere around there. So you're not really catching that many pips. That means you need to catch so many of these, which you can, but it's not like, I'd rather catch the bigger time frame, 15-minute, 1 hour. 15-minute being the smallest, because even the 15-minute, you can catch 50, 100 micropips off of one trade with the 15-minute. If you're just focused on the 15-minute. But when you look at the bigger time frame, you're just getting a bigger perspective of what's happening. Does that answer your question, Trevor? Cool. Okay. So next, I'm going to get into how to use the MT4 chart with the indicators. I'm going to show you guys how to use this. Now, what I normally do is I have this chart, this MT4 chart in the middle. It's in the middle of all 6 of my screens. If you're using just a regular, like let's just say you just have a laptop, that's fine. I even have like a travel kit, which all you really need is 2 monitors. The more monitors is just the more pairs that you're able to see. And the reason for the different pairs is like I mentioned about the correlation pairs, how I'll have Euro USD on one chart and then I'll have GBP USD on another chart. And I know they kind of move together, so then I'll have them like next to each other. But you can do it on a laptop, because the way that I have this set up is I have it just like this. So on your MT4 chart, I open up 6 of them. I open up 6 different screens, and that pretty much allows you to see 6 different setups that's happening. Oops, wrong thing there. Give me 1 sec. There we go. So 5th. So there we go. All right. So when I have all 6 on there, now I'm able to see the different currencies, and you can add a bunch more on the left side. This one's just on this demo account, but you can literally just go here, go to symbols, and then just keep adding more of the pairs. The pairs that I use is literally any pair. I just don't like getting into like pairs that aren't really used that much. Like let's say like pesos or like pretty much the main currency pairs are the ones that I use, but I'll still add more. Like GBP CHF isn't really like that much of a traded pair, but I'll still add it on. But the way that I do my trading is I can trade any currency pair because they're all pretty much showing the same thing now. They do move different. Some are more volatile than others. So I would suggest sticking to like the main currency pairs, which are like Euro USD, GBP USD, USD CAD, like USD JPY. These are mainly like the main currency pairs. Usually the ones that pop up on your screen when you first open up MT4, those should be the main ones. But what I do is I just have multiple. I do have multiple on there that I just add on, and then you have them here. So then, what I do with the chart is when you zoom in all the way, like right now I'm zoomed in all the way on Euro USD right here. I zoom out 3 times. So 1, 2, 3. So I zoom out 3 times. I have both of these activated. This one says scroll the chart on the end of on tick incoming, and then shift end of the chart from right border. So this gives it an extra space over here just so I can kind of get like that creativity, see that there's like, it might be going up kind of thing. So it's not so tight on the right side. And then this right here just moves it while it's live. So if it ticks, like any tick movement that happens, it'll just push it and it'll just keep moving towards the right as the market starts moving to the right, instead of just staying stuck in one area and all you see is just this one area. That's why this one has to be ticked off. So once that's there, the main thing that I'm looking at is going to be these threes. Now these threes show you pretty much when the market's going to be reversing, and that has to do with volatility. That has to do with when prices. Think of it kind of like RSI. When you see divergence happening, usually that 3 will pop up, which means it's going to be going from like a downtrend to an uptrend. Now the 3 does paint itself depending on which time frame you're on. So if I go on the 4, like right now we have the 3 at the bottom. If I go on the 4, it's showing me a 2 at the bottom. So it's a different thing. Like on the daily, it's not showing me anything. On the weekly, there's no 3 there. The monthly, there's no 3. So the main time frame we're using is going to be the 1 hour time frame. So all your charts have to be the 1 hour. And if you see, just by going back, let me just tick this one off so I can go back. If you see, once you see that 3, there's going to be that chance of the reversal. So you'll see there's a 3 there, and then it goes into that downtrend. 3 here, it will go into the uptrend. 3 here, it will go into the downtrend. Now, just because it gives you the 3 doesn't mean you place a sell right away. 3 is just a confirmation that there's a chance it's about to be reversing, and it's a good chance, but you're still waiting for those other confirmations. And the main ones that I'm looking at are the major market patterns for those reversals. So if I see a 3 at the top while it's going in the uptrend, I'm looking for like a double top, triple top, head and shoulder pattern to then tell me that it's about to be reversing, know when to get in, where to have my take profit, all that stuff. So if we see a 3 here, we don't have to wait for that 3 on this side. This is just showing that it's about to be reversing. If this side does pass up a little bit, it is going to paint the 3 on this side, but that's still showing you that it's about to be reversing. Now, it could pass and go up a little higher, and then the 3 goes a little higher. That's why you're waiting for those breakouts, those confirmations to get in for the sell. Because you're not getting in for a sell if it's giving you like let's say this is the left shoulder and then it gives you a head up here and then a right shoulder over here. You're not getting in for the sell until you find those breakouts. So for this example right here, we see the 3 double top pattern. Now I would do my analysis on TradingView, but just doing my analysis here, if I get my support here, we can see it came up, hit here, and then it finally broke out right here. Now with this indicator, we also do have the 21 and the 8 crossover here. So we can see it on MT4 and we can see that crossover happening. So right here, it crossed over, broke support, double top, and then neckline would be like that. So you could get in for the sell up here, catch it to that support, but because it's a double top, you should mainly wait for that support breakout. We can see it broke through and then continue to drop down. Distance from up here to the support or the neckline is about the distance that it should drop. And then usually you'll spot this continuing that downtrend. Now the 3s are going to be the major reversals. So you can write that down. 3 are for major reversals. The 2s, you're going to mainly see these in like when the market's going in an uptrend, it has this correction, which means on the correction, that's when you use your Fibonacci. So you get the low to the high and then it's coming down. It makes a 2 right at, like let's say it makes a 2 and it's 61.8, 50% level. It hit it and then it shot up. That's mainly what the 2s are for. But overall, the 2s are more of like that middle area between the 3s. We also have the 1s as well. These 1s are not so major. It's just, I don't really focus too much on the 1s. It's mainly like a support and resistance area that you're mainly going to be seeing. The main ones that I'm just focused on are going to be the 3s. So let's go back a bit and see another area. So we do see this 3 that happened right here. Now this one's a bit harder to get in for the buy because it was on a strong downtrend. There's no pattern or anything showing that reversal is going to happen for sure. Other than, we have like resistance like that, and it did break the resistance. 21 and 8 crossover did happen, gave us a 3. But if like this one's a little bit more on the risky side because I don't see that reversal pattern. Like same thing with this, we do see that wick happening. We could get in on the sell and like you could still chop the price, get support like that, wait for this to drop down, but it's not really showing me like something that's obvious compared to maybe something like this. We see a 3 here, but overall it's like kind of consolidating in this area. If we were to get resistance and then support, and then it broke through and then continued the downtrend, then that would be good for a sell. There's some areas that are like really, really good. This one's Euro USD. Let's try GBP USD. So, whoops. Okay. Well, Euro USD and GBP USD are pretty much the same. Let's do USD CHF. So right here, consolidation, broke through, dropped down. But overall, it's just like you'll see these 3s, you'll spot areas where you can consolidate, do like trapping of the price, and then you'll see the breakouts happen. That's pretty much how to use that. Tito said, does the indicator work best in the 1 hour? So the 1 hour is mainly the one that I use, and that's because the 1 hour is where we're spotting those reversal patterns. Like I mentioned, we're spotting those major market patterns on the 1 hour. We can spot them on the 4 hour as well. So 1 hour and 4 hours should be fine. But I mainly use 1 hour. So I would stick to what I just used, just use the 1 hour. But as far as like, let's just go on the daily. Now I mentioned the bigger the time frame that you use, the bigger the kind of pips that you're able to catch. So like right here, we could see a double bottom. 1, 2, goes up. Up here, I guess you can see like a left shoulder, head, comes down, comes up, like right shoulder there, breakout, and drops down. But that pip move when it drops down is so many pips coming down. So this is more like a long-term hold. So with my method of trading, you could use it the way that I do it, 200 micropips, or you can do long-term trading, because some people don't like more shorter-term scalping. It really depends on what type of trader you are. Me personally, this is the way that I like doing it, just catching like quick profits, going in, going out, and just making money. I don't like waiting like 4 days, 5 days to make like 20,000 off of a trade. Like, yeah, 20K might be good, but then compared to if you can catch that in 1 day, then that's even better. So let's see. All right, now as far as these threes, something else that I look for as well is if I see the three happening on the 1 hour time frame, I could look at the 4 hour and see if it gives me a three or what it's showing me. Like on the daily right here, we don't see a three. We can see that it's support like that. Now this analysis would be done on TradingView, but like we have support there. If I go to the 4 hour, it's giving me a one, but then if I go on to the 1 hour, it gave me the three here. So the three is mainly what we're looking for, but I'd rather see like an inverted head and shoulder or some type of pattern where I can get that neckline breakout into the reversal. Now, let me show an example, see if we can spot it. So, okay, so kind of right here, head, left shoulder, right shoulder there. Neckline look like this. Drops down 21 and 8, crossover is down. Now this red right here, if you can see, this is a 400 moving average. Now the 400 moving average, I didn't cover over that. I mainly covered over the 200 moving average, which is why we have it as gold. You can see the gold one's 200 moving average. The 400 moving average on the bigger time frame, this is where it gets a little bit confusing. So the 400 on the bigger time frame should be the 200 moving average. So if I go from like the 1 hour to the 4 hour, if I go onto the 4 hour to the 1 hour, we should be seeing it's going to be different. So this one's actually showing me, because I went up, it should actually be back. So the 1 hour, give me one sec. So we have the 400 here. Okay. So we can see this one's hitting the 100, but then this red's hitting the 400. Okay, so from the 400 to the 100, that's pretty much the difference. So some of these lines, they're playing like support and resistance. Depends on what time frame you're on. The main ones that you're going to be focusing on are going to be like the 100, 400, and the 200. There are these other ones like the 34. That's going to be another strategy that we're going to cover over today. It's going to be the 34 wave that I use. 34 is like a pretty good one, and then you guys already know the 21 and the 8 crossover. So these could look a little confusing, but overall it's pretty much what we covered. The only thing was not the 100, but the 100 also plays as like support and resistance. You can even see this 100 hit like resistance, hit like resistance, resistance. Then if I go on the smaller time frame, now it's this 400 that's hitting like resistance on those areas. So it's the same thing as a 100 on the bigger time frame, but it's like for this smaller time frame, it's a different indicator. It's just different numbering. So it's mainly support and resistance areas. So if you see a breakout on some of these bigger ones, like the red, orange, or the teal looking color, then there's a chance it's going to be going up to that next line. So I don't want to complicate it too much with the whole indicators, but I'm gonna show you as far as how I know, and the best way to use them is going to be spotting these threes and looking for those reversal patterns. That's really the best way, because I mentioned that price action is the primary focus. Indicators and anything else is going to be secondary focus. As long as you have more than 3 confirmations, you should be fine. So some of these, like we can see the gold and the teal, they're kind of together, which means kind of consolidating on this time frame. But then the bigger time frame, it's overall going at a downtrend, because we have like this here. So if it breaks above the red, gold, blue, there's a really high chance that it's going to be going in that uptrend. So we do see this 3 right here. If it breaks above the blue, gold, red, while it's coming down, let's say we were to chop the price and we had like, this is a strong resistance right here, and then this is a strong support down here. So we have the strong support, we have the 3 right here, it's expected to go up. And let's say later on over here, it breaks through this resistance, breaks through the red, breaks above gold and blue. That's like more confirmation. So it's not too complicated. It's just mainly spotting out the patterns. If you want to keep it as simple as possible, spot out the patterns, see the 3s, wait for the trend line reversal. Okay, so so that being said, do you guys have any questions as far as how to use these indicators? See, someone said MT4 has been lagging all day. Yep. All right, so I guess you guys don't have questions. We're gonna move on to the next section, the file. So I mentioned that yesterday, or for day 5. It shows you how to download the files. We have the files under day 5 as well, so you just go, I think it's under the homework section or somewhere below the video. You just go into the files and you put them where they need to go. And then once they're on there, if you don't see the 3s after you put it on there, then you're probably not doing it right. So like you just literally just drag and drop into there. Once you have the files all there, then you can like save the template. And then for all of them, you just put the template on and it should work. Now I'd suggest not customizing those templates, just using it exactly this way. I know there's multiple people that I've seen that they just, like, you can adjust the color, the background color, that's really your preference. I just use it this way because it's not really hard to see, pretty easy to see all the colors and everything. So I did mention you zoom in all the way, zoom out 3 times. 1, 2, 3. This is enough for you to be able to see the patterns that's happening. So with looking at all of these, with looking at all these 6, let's see who can spot this out. Okay, with looking at all these 6, what do you guys notice as far as my settings? Are all of them right? Is some zoomed in closer? Which one zoomed in closer? Whatever. Let's see if you guys can spot it out just by looking at this. So then if you guys are on your charts, you would be able to spot it out. So which ones do you see that's going to be reversing? What patterns do you notice just by looking at this, and which ones should be, like, which ones which one of these charts don't look right. And maybe it might be time frame, maybe it might be zoomed in. Okay, bottom left is too zoomed in, needs to be zoomed out 3 times. Perfect, okay. So I'm gonna zoom in all the way and then zoom out 1, 2, 3, there we go. And you see now that I zoomed out, I'm able to see this 3 on this side, so that's a good thing. Let's see, GBP CHF is zoomed in, yep, double top on Euro GBP. Let's see, Euro GBP, kind of like that double top happening. Maybe if we look at the bigger time frame, there's a strong resistance right there, so that could be a possibility. Let's see, needs to be 1 hour. That's a good catch right there. So yes, this one's on the 15-minute time frame. It does need to be 1 hour. So all of them are the 1 hour, just this one it's not. Someone said triple top on USD CHF. So not exactly triple top. Let's see if someone else can get that one right. EJ needs to be zoomed out. That's a possible thing. Let's see. 1, 2. Yep. 1, 2, 3. So now EJ zoomed out. Good. What do you guys see on USD CHF? Head and shoulder. Perfect. So this is a head and shoulder that's happening on USD CHF, which maybe just by catching this trade, it might pay for this entire training. Who knows? But we can see the support line like this, but then making the support line tighter. I'm getting this point to this point, pretty much right there. But if you see, let me insert, I'm gonna do shapes, rectangle. So if we see, we have that left shoulder. Now I would mainly do this analysis on trading view, but you could do analysis on MT4 if you wanted to. It's just a lot nicer on trading view. So we have left shoulder, kind of like this head area came down, it's coming back up. This is kind of like that right area that looks like it's creating. Now what I would do with this is I would connect this support to here. Now sometimes I do zoom in just so I can see it a little better, but I would zoom it back out. So we can see 21 and 8 is crossed over. Now the 1 hour time frame, if you see, it's mainly the one that I look at as far as like support and resistance lines, like spotting those reversal patterns, even MT4. So if you think about everything, 1 hour time frame is the main thing. And then Brandon said the magical number, the 3. Yep. So we have that left shoulder, head, right shoulder. Now we know the distance from the head to the neckline is about the distance that it should chop. Now this one would be better on MT4. I do have the settings set as like array, so it like goes past that, but we can see these 3 dots. This is the middle. If the breakout was to happen up there, pretty much we're expecting this to drop right at this support down here. Now there's something else that's inside of this MT4 template. If you guys can see these spacings, I'm gonna get into it today, but we can see like it says RN 0.99500. And then this area right here, 0.99375. Wait, that's strange. .99250. Okay, so these middle dividers, I think I changed it, but pretty much there's this straight line right here, and normally it's a different color. Let me see if, oh, there we go. Okay. Oh, I think because I dragged one of these over and it changed the colors. So if you see this red line, it's 99500. This black line's 250. This other one is 000. This other one here, 750, 500, 250, 00. So it's something that we're going to cover today. which is going to be called the Cordes theory. I know someone put it in here, but this is a Cordes theory. Now, Cordes theory is really good, but it's just like an extra confirmation. And let's get back to this. So with USD CHF, this one's expected to drop down. We see the 3. It did hit the Cordes area, which means there's a chance, especially if it breaks below this 250, that it's going to drop down to 0.0. But it's expected to be reversing. So that's the main thing of what we see here, is that it's expected to drop. Now for USD CHF, I am in on a 20 lot right now on this one. So that pretty much means, let me actually look at it on my phone. My phone's dead. Anyways, I'm in for a sell on this one, and pretty much at the end of this, if all of my trades hit take profit, it's going to be like 21K in profit. 21K in profit on one of my accounts. I did mention I normally use 5 different accounts, but focus mainly on one account. And I do kind of do high risk. I know there's some people that do like 2% risk on every account, but if you have multiple accounts, it's okay if you do 20% risk per trade. You have 5 different accounts, because then when you put them all together, you're not really doing 20%, you're doing less. But yeah, this one should be expected to drop. Yeah, so let's go on to the next section here. And by the way, if you guys see these trades that are happening here, these trades are from auto trading, automatic trading through a bot that's just placing the trades automatically, like I just said 3 times. But it just goes in and out, looks for market opportunities, and it's all like encoded. So it is connected to a VPS. All right. So with the Cordes theory, I'm actually erasing everything. I did mention about this the other day, but all right. So Cordes theory. Now with the Cordes theory, if you think about the market's mainly ran by people. Whether it's institutions, whether it's big banks, whatever it is, it's all ran by people. It could be automated softwares as well that are in there. I did mention about that. But mainly it's all about people putting in money, because even the people have to start the automation and put in their own funds in there. But overall, the market's ran by people. And with currency exchange, if you see like currency exchange is happening usually when people are traveling. When people are traveling or businesses are doing transactions, and there's transaction rates. So if like I'm trading my USD to CHF, like if my business, let's say I have a merchant in like Switzerland or whatever, and I want to exchange my money, and let's say I'm exchanging $1 million, but then the exchange rate, and then I'm the one that's making the market move. And everyone is all combined making the market move. So it's always going up and down, and us as traders, we're going in on those moves, and we're just making money off of our predictions. So while other people are exchanging for other reasons, our reason is to make money. Theirs is probably to make money, but it's like for a different cause, maybe merchandise or something, or just traveling and they're exchanging their money. But anyways, back to the Cordes theory. Because it's ran off of people, when people take profit, or when there's like exchanges that happen, if you think about it, people normally don't like getting change, right? Let's say you buy something, like you don't really like getting those extra cents. Like you'd rather just keep it even. Like you buy something for $5, you'd rather just buy for $5 and like $4.98 and get 2 cents back, right? $5 is like the preferred thing. So when people are doing like exchanges, they mainly target these major areas. So if you could see on the right side, quarters theory has to do with these numbers on the right side, which we could see 1.01000. So any area that has a bunch of zeros is going to be the majors. So I'm going to make the majors as like a red color, make it a little thicker. So the majors, they have a bunch of zeros. So it says zero zeros, and then it's a 500. So basically, it could be 5,000, 5,000s, or it could be 500s, but it's mainly the zero zeros. Now, depending on currency pair, it does change. Some of them might be 5,000s, some might be just 500s. So these are the majors. We can see I just marked off the 00, the 500 area. I would have to drag this up, but we can see 1.01500. So that would be a major. I'm trying getting it exactly. So that would be a major area up there. Now, we have the majors and then we have the minors. So the minors, they are the 250, the 250s, and the 750s. Now, if you think about just the term quarters theory, it's like, let's say $1. I know there's some people that are like in the euros, but over here, like US, there's $1, and then we have 25 cents, 50 cents, 75 cents, and then $1. And then it's $1.25, $1.50, $1.75, $2. And then, so it's always by the quarter, pretty much to do that. So the minors are like that middle area between like 100, then 101 250, then 101 500, then 101 750. So I'm gonna do the minors like a blue color. Let me change this blue coordinates. Sometimes for the coordinates you can adjust it because it's a little bit hard to get it accurate down there. So move it to 250 and then it adjusts down here. And then the 750 up here. See if I can get it exactly. There we go. That's exactly there. So pretty much with the quarters theory, what it is like it's like a kind of support and resistance area. And it's just something to keep in mind. Doesn't mean it's going to be like the main thing. But what you're mainly going to see is that in the majors, usually you see like triple bottoms happening, or like a 3 on the major, like a 3 on the MT4 chart. Like if we brought up the MT4 chart, it would be a 3 down here, and then it would do its reversal. So the 3s are mainly where you see that like bigger reversal. The 250s and like the 750s, the minors, those are mainly like, let's say price moves up, it would mainly move up to like around the 500, down to the 250 to continue the trend into the 750, down to the 500, and then continue going up. So kind of like support and resistance. But even the 500, because it's majors, sometimes you might see it just hit like resistance there, down to the 250, 250 up to the major, and then going into the downtrend. So they're kind of like support and resistance areas that you'll see the price move up to around that area and then shoot back down. Now, with the majors, what I normally do is I keep in mind, you don't have to draw out like a rectangle, but I keep in mind a 50 micropip difference. So like from 500 up to 550, I could do a box. So I'm trying to get it perfectly. So it's kind of hard. I'll just do it at 551. And then at 500 going down, it would be 450 because that difference from 450 to 500, that's 50 micropips. So overall, it's like 100 micropip difference. So do that bottom one at 450. You can see I put 451, but I can adjust the coordinates right here. I'll just probably drag this further, but I can adjust the coordinates so like 550 and then 450. So that's exactly 100 micropip area. Now, I normally keep in mind 100 micropip area only for the majors. So this is mainly for the majors. I'm keeping that in mind. And the reason for that is because some people, they have their take profit level up here, but they would exit out a little bit earlier, just like a little bit earlier, just so they can, or brokers won't exactly reach this level because sometimes the spread, so like it would hit it on the actual charts, but the spread is a little higher. So it would actually, it won't really hit it because of the spread. So if you do something like this where it's like take profit at around 450, sometimes if you see inside of my signals, I do call my trades where it would be like take profit 0.01250. That would be like take profit one. But then if you see like the ones that are like a 1.01, I don't do the 000. Usually I'll do like 1.01050. So you would take profit a little bit earlier before it hits, because sometimes it won't hit the 0 exactly, but it will hit around that area and then it will reverse. So that's pretty much with the Cortis theory. It's playing as support and resistance, and you usually see the majors have those big reversals. So if I go onto my chart, you'll see like the main area. Let me just spot out this area right here. I know this is a resistance area. Now I'm gonna look at the right side. Well, I don't need to look at the right side. I just look at the price. You can see this is around the 250 area. Now, this one didn't exactly hit it. Let's see this low down here. So this one's around that 500 area. Let me change this to 500. Now with the 500 area, that's the one that we mainly have that box around like the 550 and then the 450 area, creating like that area where it'll hit around the box and then do its reversal. So let's spot like this resistance area up here. Now this is around the 250 level. That's not right. 0. Let me adjust this. Actually, no, this is around the 0 level. So pretty much this entire area is around that 0. Let's see. The 250 is right here. Let's see, 750. It's right here. Now, what you will see a lot is it's just hitting like support and resistance off of these areas. But with the Cortis theory, the main thing is you're just not really using it as support and resistance too much. It's more like the price, if it drops below the 750, is most likely going to drop down to the 500. And if it drops below the 500, then most likely it's going to drop down to the 250. Doesn't mean that's going to be the main target. You would already know, like if it's doing a head and shoulder, like that distance. But usually that distance will be like it will be where the another area is at. So an example, let's see this area right here. It's like a triple top pattern. Neckline like that, breaks through. Distance from up here to down here is about the distance that it's expected to drop. Once it breaks through, it does hit its profit area here. And if you see wherever that profit's at is pretty much at that 0, 0, 0. So 1 point. So it's pretty much at like that take profit level right there. And if you were to draw the box, you know, that 50 mark, but then sometimes a breakout would happen. You can see the breakout actually happened right at the 500 level. If you look on the right side, it's the 500 level is like right here. So there's another major area. But if it drops below the 500, then there's a chance it's going to at least drop down to the 250, which is pretty much what did happen. It dropped to the 250. I need to change the coordinate, make it exactly 250. So it dropped down to the 250, came up to the 500, and then broke through to the 0, 0. And the reason for that is because there's like sellers that get into the market. There's sellers that get into the market, but then they would take their profit out right here, and then more buyers are beating the sellers, but then buyers get in to around here because, like, let's say this is resistance. So then they get scared right here because there's a chance it's going to be reversing. So yeah, they might make some profit off of it reversing, but then they get off like around here, and then overall sellers push the market back down. This is when sellers are gathering up and they're just like, okay, price is just about to sell, doing my analysis, resistance to support, 61.8, 50% level, hitting resistance. It's definitely about to drop, and then price does shoot down. But you would already know that target goal. So as a trader, it's just mainly knowing these strategies and then being able to get in when these breakouts happening. The Cordes theory, just an extra confirmation. You don't have to write them, like you don't have to draw them out, because what you're doing is you then look on MT4 and you just have them there. So like you can see this USD CHF was at around that resistance or that 0, 0 level. So these reds, there's the 0, 0s, and these dashes are the 250s. So you can see it hit the 250, kind of came up. Once it breaks to the 250, like we already know kind of that head and shoulder patterns being made. But if it breaks to the 250 plus breaks the neckline plus the blue stays under the red, then we know it's overall expected to drop. And we can target down here to the 0, 0, or even like the 0, 0, 0, 5, 0 to drop down. So that's pretty much how to use this. Do you guys have any questions so far? So we're going to take like a little break. We're going to take a little break. Right now it's 7:15 Pacific Standard. We'll be back at 7:30. If you guys have any questions, put it in the chat area, and then we'll cover over those questions once we get back. All right, you guys. We'll see you guys soon. All right, so we are back. Okay, so getting into this next strategy, we just covered over the Cordes theory, but this next one is going to be the wave strategy. I'm going to add out to my chart. Now, this wave strategy I learned from this book. Actually, kind of crazy. This book costs like $80, probably like $90 or something. I was watching reviews and stuff about the book, but this was one of the things that I got out of it, because I've tried all the other strategies, and basically the way that I learned was I was taking mentorship, reading books, like doing online classes and stuff, kind of like how you guys are doing, but I was getting all my main strategies and putting it all into one. So this one was one of the ones that had stuck, and that's because this is one that works as well. And I'm only getting things that work best for me that I've tried multiple times and I see it consistently working. So with the wave, what we are going to be using, it is going to be a moving average. It's an exponential moving average. And there's going to be 3 different lines. So there's going to be 3 EMAs. So I'm just going to put 3 EMAs. Each of them are going to be the 34. The setting's going to be the 34. So you guys already know like the 21 and the 8. There's a 200. This one's going to be the EMA 34. That's why even on the MT4 chart, there's a 34 one on there. It doesn't have 3 of them, but it does have the main one. So the 34, we have the high, the low, and then the close. So with the high, the low, and the closes, this is going to be part of the setting. So it's going to be the 34. There's 3 of them, and it's going to be the high, the low, the close. So I'm going to add it onto my chart right now. If I go to indicators, what I'm going to do is I'm going to remove the other ones. I'm going to hide them. Indicators, I'm going to look up EMA, moving average exponential, add it onto my chart. And when I add it onto my chart, I'm going to click it 3 times. So 1, I already clicked it once, 2, 3. Now you do need an upgraded account to have this many indicators on your charts, but you don't need all of them on your chart. And I'm going to explain how you should actually do it. So with the EMA, I'm going to go here. Now right now it shows that we only have 1. But we go here. Well, actually, let's go to the first one. So we have 3 of them on the left side right here. Go to the setting. So one of them is going to be the high. So it's a 34, the high. The style for this, it's really your preference. I like keeping it something that doesn't look the same. So I'll actually make this one, I'll make this one red. So I did the 34 high, then we're gonna do 34 low. I'm gonna do this color like a dark blue. So it's 34 low, and then this last one, it's gonna be 34, and then the close. The close should already be the one that custom comes on there. You can change the color for this one. I'll just change it to like a goldish color, and press OK. All right, so I'm about to erase all these lines that we see here and just focus on this wave strategy. Now, as far as these numbers, the 34, it's been tested 32, 31, 50, like all these different ones. And it's been tested and seen which one works best with this whole like playing a support and resistance type thing. This is another one of those like support and resistance type indicators. But it's also moving average is really seeing which way the trend's going. So with the wave, there's 3 different lines. And what I like doing to identify which way the trend's going, if you see, let's say this is a clock right here. We have the 12 o'clock being that top one. This would be 3 o'clock. And this would be 6 o'clock. So if we see these lines facing in like a 1 or a 2 o'clock, this is going to show us that the trend is going in an uptrend. So I'll just make it green. When you see it going in a 3 o'clock, this is going to be showing us that the trend is consolidating. And then when you see it going in a 4 or 5 o'clock, that means trend is going in a downtrend. Pretty simple, but this is 1, 2 o'clock, 3, 4, 5. So when you're looking at these 3 lines, you're mainly seeing which way is it going? Is it doing 4 or 5 o'clock? And you would start seeing when it's going into like the downtrend or an uptrend. So like in this area right here, we don't really see like a 3 o'clock. It was going in, like, let's say this one's kind of like a 2 o'clock right here. So there's a slight uptrend, but then starting here, it got into like that 4, 5 o'clock angle right there. So what the trend had done was, we can see the candlesticks broke through, came up hitting like resistance, and then it dropped down. Came up, it didn't hit like resistance, but overall what we know is that it's going in that downtrend, but usually it will hit and then it rejects, hits and then rejects. So you even see right here when it's going that uptrend, once the price is above these 3 lines, just think of it as it's going to come up, hitting this as like support and then coming up. Usually you'll see it hit like either resistance on the downtrend or support on the uptrend, but it'll have its pullback and it'll hit the wave and then it will continue to go into that trend. So when it's showing something like this, like at 3 o'clock, we know it's consolidating, going into that sideways market. When it's going into that 1, 2 o'clock, you can see how it came up, price was above, but it hit the top of the wave, came up, kind of that wave, came down, hit the wave. Even in this area here, it came up, but it hit the wave and it didn't pass through. So if we were to place a buy, usually you can have like a stop loss anywhere behind, like let's say this blue line. Now, it depends on which color you use, but if it's going in that uptrend, there's going to be that higher chance of you winning that trade, especially if it's going on that uptrend. So let's just say in this area right here, it's hitting like support. We have the resistance line, and then it broke through. Like if it breaks through, you can have a enter in for a buy there, stop loss somewhere under that blue line, and then take profit. You know, that's wherever probably a major resistance is at or something like that. So let's say major resistance is up here, then you have like your risk to reward, and then you're pretty much set on that one. So the main thing is catching it when it's on the trend, catching when it's on the trend, comes back hitting like resistance, and then just seeing these areas. Right here it did pass through, but overall, the main thing is it'll hit this wave and then continue going the opposite way. So the way that I use the wave strategy is I'll keep it on my MT4 chart, or I'll keep it on my phone, either one. Either I'm keeping it on my phone or my MT4 chart. And then on my actual MT4 chart, I have the 21 and the 8 crossover, so I'm fine there. So I don't need to have the 21 and the 8 crossover on TradingView. I can just keep the wave on here, and then I'm just looking at the 21 and the 8 already on this one. So then I would be able to see the crossover and everything happening here. But then with the wave, like let's say this right here, USD CHF, we have like a support line like that. We can see it gave us that double top pattern. 1, 2. Neckline, look like that. Double top pattern. If we were to get this resistance like this. So it broke through and it continued to go into that downtrend, but we can see it broke through right here, came up hitting the wave, and it came down. So whether you were to get in right here for a sell, or when it came up, hit the wave and got in for the sell, overall we know that the wave, most likely you can place a stop loss somewhere above and be safe, or to be even more safe, depends on where you take profits at. Like let's say your target, if I was in this trade right here getting in for the sell, we would already know that the distance from up here to down here, about the distance that it should drop. So that's should be like where my target should be at. But then if we have like more targets, like let's say we're aiming for take profit 2, because we overall know that it's in a downtrend. So let's say this continues to drop down, and this is our second take profit over here, then we could still target that move coming down, but overall looking at the wave and then seeing like risk to reward, see like what we can do. Because if we're targeting take profit 2, we can probably place this up here and then take profit over here. It's about like a 1-to-2 ratio. So then your chances of winning this trade are going to be much higher, especially knowing that it's overall going in a downtrend. And then using this wave is just kind of showing you where it's going. Once you start seeing that it's consolidating, usually when it consolidates and then price breaks above the wave, then we know it might be starting the uptrend. Like right here, it's a strong downtrend, but it's overall like consolidating in this area here. It's just consolidating, and then price breaks above it, and then it looks like it's starting to go into that uptrend. And then right here is the main area where it starts continuing that uptrend. So it's mainly just saying which way the trend's going, looking at this, but still remembering this is the secondary focus. The main focus is what's happening inside. Even though if this is like above the wave, we're still looking and we're still seeing like if we see a head and shoulder breakout, because we might be able to catch this. Because let's say it breaks through the wave and it gives us like, let's say a head or triple top neckline, breaks the wave, get in for a sell, and then it can start going into a downtrend. So it's really overall what's happening with the trend, whether breakouts happen and then just getting in. Now the time frame, I'm using the time frame that I would mainly use it on. It is the 1 hour time frame that we use. So the 1 hour is mainly where we see everything. The same thing with the wave, you could use it on the daily 4 hour. Like let's say you just want to catch a bigger trend trade. You could do the 4 hour daily. It adjusts based off of the time frame that you're in. And you would see if I move it, zoom out a little bit, you could see these areas where it would price is above 34 and it just hits. And then when it's below, it'll hit like resistance, like how I did right there. And once it starts going up, it'll hit like support. So just seeing overall which way the trend's going, and then when price comes down, this is kind of how I would see it. It doesn't matter what time frame you're in, but if price comes down and the wave is still showing that it's going up, there's a chance it's just going to do that correction, and then go up. So what I do with the wave is I'll mix it, wave and Fibonacci. So when it does come down, we get the low to the high and then kind of see which area it hits and then shoots up. So let's see another area. Let me go on to the 1 hour. So let's do right. We can do anywhere in this area. Let's just do right here. So we get the low, we get the high right here. We can see price pretty much hit at 5061.8. When price goes above the 50% level, you're pretty much getting ready for a buy. So buy would be above the 50%, stop loss somewhere below 61.8 when you get in. So it could be below 78.6, depends on where your take profit's at. You can kind of adjust the stop loss. You don't want to have it too tight where it's like, it's crazy. Anywhere below the 61.8, if you're catching that trend going up, would be fine. And then the target will most likely be this high, if not even higher than that, negative 21%, 61.8. Like most likely this would be my take profit 1. My take profit 2 would be somewhere up here where this resistance is at. So we can see price hit the wave area, but then price went above the wave right when it was above the 50. So that's already like 2 confirmations right there. And maybe we can get 3 with this. Kind of. This is showing it's going down right here. It's kind of a little slant going up. But that's the main thing, just doing it with the wave. So let's see this going down. So when this comes down, let's see, we got the low, low, high. So get this high, get this low. It hit that 38.2 and it hit the wave and then it dropped down. So you're just mainly mixing it with what you already know with price action and just getting these areas. If you wanted to mark it off just to make it easier for you, let's mark off the low, high, higher low, higher high, higher low, higher high. We can actually see in this area right here, we have like resistance, price was trapped right there. It broke above the wave right here, plus it hit like support going into that uptrend. Like there was a really high chance this was going to go up. Resistance to support is about the distance that it should go up. So it breaks through. So you would have hit that target and you would have been in profit. Overall, knowing it's an uptrend, like there's just so many different confirmations that you can get from these trades. It's just the main thing is mixing it all together, spotting them while it's happening live, and then getting in on those trades. So tomorrow the main thing is going to be confluence. For tonight, I want you guys to do some homework, which is first off, add these indicators onto your charts, the 34, and you're going to mix it. So you're going to go on the 1 hour time frame, and you're going to do your Fibonacci. You're going to do your Fibonacci mixed with the wave. And you're going to spot out the areas of 50, 61.8. Like let's say this area right here, this would be a good area to spot out. So it's going in the uptrend. It's going in the uptrend, 50, 61.8, and then price goes above, and then just catching that going up. So it's showing me that you get your Fibonacci, and then you can even spot out like do this call out. Price above wave. So it's just spotting out the Fibonacci with the wave and then price going above, which means most likely it's just going to go up to at least a 0-0, but since we know it's an uptrend, most likely it's going to create that higher high. We can see with this, it pretty much hit that negative 61.8, and then back down, and then you can just get the next area, get this low, get this high. Like if I was to mark this area off, I would trap the price. So you're going to see it differently depending on which currency pair you're analyzing. But if you can spot out that you trap the price, you get your Fibonacci, you draw your box between 50, 61.8, you see price goes above, the breakout happened here, like you're just spotting out mainly these areas. Okay, so that's what I want you guys to do for tonight. Just getting these set up, putting it onto your chart, and then get familiar with your MT4 chart. Get familiar with spotting out the threes, spotting out the patterns, because you're just gonna mix it all together and spot out these trades. Now, with the MT4 chart, these areas where it pulls back, that's mainly where you're going to see like those twos happening. Like the threes happen at the very top, but the twos are happening usually at the bottom. So do that. And then I'm going to be viewing the homework. So just mainly spot out the Fibonacci, hitting a support. I'm going to take a screenshot. I'm going to stop the recording, do a couple more markups, and then I'm going to put it on the homework section so you guys know exactly what to do. But with this, I would continue getting support, resistance. Then you guys let me know if you guys have any questions while I'm doing this markup. I'm about to pause recording, and then we'll be back tomorrow.